welcome to Tuesday. And like every Tuesday, we always take a look at the performance of the main board for the New Zealand Stock Exchange, being the NZSX50. Before I jump across and share my screen, just remember though, this is for educational purposes only. Definitely not intended to be personalised financial advice. You do need to have a chat to your own financial advisor if you are looking for that. Right, let's take a look and see how we went last week. As you can see, I have got the NZSX50 gross index up here on the screen. And I've got this over the 5-year chart. So let's just zoom in and look at this. We've got a good little hammer showing there for that week last week. And what that indicates, or a hammer, it means that there is quite a long tail, but basically no wick. The week has closed higher than where it opened, which is a good sign. Obviously, there were a lot of sellers out there, but it was the buyers that took control. So it's the sellers that drive that tail down on that candle, if you like. And if I look down the bottom at the volume indicator, there was a lot of volume last week, which is really good. And you can see I've got a moving average here of a 30-week period over that moving average, and it's popped up above it. So that too is a good positive sign. Let's just take it back out to that 5-year chart again, and let's go and put our moving averages on and just see what they are telling us. So we'll change this one to 30 and make it exponential. There we go. Right, so even though last week was a positive week and it closed up, which is good, it's still trading below that 30-week moving average. We want to see the market cross up above that before we can say that we're in a upward trend. Who knows? It could be potentially a range-bound market. Nobody will know until something actually happens. Let's also go and put the 15-week moving average on. Now, because this is a quicker moving average, it just gives us a little bit more of an idea how things are really performing. So what I mean there is you can see back around the end of March, you can see that 15-week moving average cross through the 30-week. So because it's a little bit faster than the 30-week, it responds a little bit quicker. And by using the two in combination rather than in isolation, gives us more of an idea as to what is happening on the market. So naturally, a shorter time frame moving average will respond a little bit quicker than a slower one. And that's how we can tell. So we can see here that that 15-week moving average is still trading below that 30. It's not looking like it's going to cross to the upside at the moment. Who really knows? But because of that, because it's trading below it, it's definitely, to me, it's saying that to stay out of the market. So I'm not looking actively for any new trades at the moment. On a positive note, there were a few shares that I'm already holding in the New Zealand market that I was able to increase my stop losses on, but certainly not something that I want to be actively looking at buying, simply because the market isn't going out and looking like it's rising, or it could be a little bit range bound where it currently is. But let's go and have a look at the 1-year chart and just see what that's also telling us. Naturally, it's a little bit more noise because these candles come up to daily candles. So let's just zoom in. You can see that we've had 2 positive days in a row, which was really good for last week. Wednesday was down, Tuesday was up, but Monday was down. Who knows what we're going to see? Thursday was encouraging. We saw a lot of volume on Thursday, which is a good sign. And if I zoom in, it does look potentially like that 15-day moving average could be about to swing up. Who knows? We'll see what happens for this week. But like I say, certainly, I'm not looking for any new opportunities at the moment. Let's just go back out to the 5-year chart. We'll just see what that volatility is. So I've got the ATR, which is the average trading range, down the bottom. And I put that over a 21-week period. Now, this is something I look at only on the weekly chart. So you can see at the moment, it's sitting at about 285.06. Let's divide it where the market is at the moment, which is 12,991.31. And so that's still giving us a volatility of about 2.19%. So if you're unfamiliar with the ATR, that is saying over 1 week, you could potentially see the market move about $285. Now, naturally, there are going to be periods where it moves a lot faster than that, or a lot higher than that, or a lot less. But this is the indicator that really sort of tells me whether there is a lot of movement or it's mediocre. And so at a 2.19% volatility, that's quite middle of the road. So that's not a concern for me. If it gets up around 5%, however, or at that 5% figure, then it's a little bit too volatile. So in other words, it's jumping around a bit too much. And that's another thing that I would do to stay out of the market. But hey, not too much else to report for the New Zealand market there. Good to see that we've had a positive week last week. That is an encouraging sign. We'll have to wait and see what happens this week. Come back on Thursday, actually. I am going to do a review on Contact Energy shares, and I'll stop sharing. Reason for that is Infratil has recently announced that they're selling about 5% of their shareholding. So we'll go and take a look at Contact Energy and just see how the market reacts or thinks about that. And remember, if you have got a share you would like me to review, or if you've got any questions regarding your share trading, share investing journey, anything like that, reach out. I'm here to help. Happy to do a future video for you if you would like. So until Thursday, take care.